Hi, good morning. This is Chris with Suarez Home and Finance. So we are on Coffee with Chris and wanted to tell you this morning what the difference is between pre-qualifying for a home loan, whether you are buying or refinancing, and being pre-approved for a loan. So there are major differences, and it can blindside you if your information, if you have not been looked at in full correctly the first time. It can devastate. It can cancel your contract. It can make you put in a contract on a house that you cannot afford. Or move forward with a refinance whenever it should have, the numbers didn't work in the beginning. So, as always, I like to educate, give you information, no matter if you are local to my area or nationwide. We have a lot of people that watch our station nationwide and contact us, from other states all the time. So this is for information. It's for knowledge for you. It's for educating you whether you are, again, buying or refinancing. So when you are buying or refinancing, you need to know if you're able to even get the loan. So you're not given a loan just because you have 800 credit scores, because you have $1 million in the bank, because you have property that is zone free and clear. Those things don't matter. They do matter, but they don't matter to an extent to where, oh, yep, you have, all this money in the bank. We can pre-approve you today. You can get a loan, no problem. It's not just that simple. So when you are buying a home, we've talked in the past or whatever about what the numbers mean, what the documents that you need are, and the different loan types and credit scores. So all of these come into place whenever you're getting pre-approved. So what's a pre-qualification letter? So this is when that you've either gone online or you have spoken with somebody and you've given them your information verbally, and okay, yep, I make $100,000 a year. I have 10% to put down. My credit scores are 800. All of that kind of stuff. So what happens is that, from what I have seen, I've never issued a pre-qualification letter, but from what I have seen, from what I have been told by clients, from what I've been told by other lenders and banks as well, is that you're giving this information verbally or you're keying it in, but nothing is being verified. So being verified means that you've given your paycheck stubs, your pay stubs, you've had your credit pulled. Um, you have given them your tax returns to make sure of what monies are there. You've done all of these things. If you've not done all of these things, then you've not been totally vetted. So a pre-approval letter. So basically a pre-qualification letter. We're going to go over kind of the differences in just a minute. So basically a pre-qualification letter is that you're verbally saying these things. You may give them, you may have your credit pulled or whatever, but you're verbally saying most of the information. We have, self-employed people, which I'm one of them, but I'll have self-employed people call me and say, "Oh yeah, I make, 300 or $300,000 a year." And we've talked about this on other podcasts before. Well, that $300,000 a year is, they're saying, is gross. That's not the bottom line net and all of these other calculations that are added in. You can't use gross because you pay bills out of that. So again, this is where, you have to be checked out, you have to be vetted, you have to be looked at in order to make sure that you are good to go to move forward with a refinance or for purchasing a home, because you're putting money out of pocket once you are pre-approved. Once you are told that you're ready to go, you are putting money out of pocket, and most of the times you can't get that money back. So you want to make sure that you're solid. So a pre-approval letter, pre-approval. So a pre-approval is the next steps in securing a loan. This is when information, but is most of the same, but the difference is that this is verified. So what does that mean? So the key things for a pre-approval are your credit. Your credit is reviewed. Are your credit scores there? What does your credit scores allow you to do for a loan type? So different loan types require different credit scores. How much money do you actually need? So though, what is there anything on your credit that needs to be fixed? Can you pay down some things? Some of those things or whatever are things that we look at for credit along with credit scores. Do you have any judgments, bankruptcies, liens, those kind of things? those totally dictate, bankruptcies totally dictate the type of loan that you can get. You don't want to be pre-approved or pre-qualified for a loan that you can't get because you had a bankruptcy and it's only been a certain amount of time. That is huge. um, your income is verified, meaning that you're sending in your 30 days of pay stubs, you're sending in your tax returns, your full returns. In my case, I require that. I don't know what others require, but you want your full tax returns to be reviewed because if you're self-employed, again, there's numbers on there that can be used back and forth. But also, there's been, several people I've experienced in the past that said, no, they're not self employed. But then I look at their tax returns and they do have something. Maybe they do Etsy, maybe they do, Mary Kay or Tupperware or whatever. And that is on their tax returns and that does matter. So, income, also, what is your income? You may say that, yep, I work 40 hours a week and I make, $25 an hour, blah, blah, blah. But you forgot to say, yeah, my hours vary, or yeah, I took time off, or, these other things. So again, it matters. Um, your employment type and your history. So again, are you self-employed? Are you employed? Have you been employed for 2 years consistently with the same job? Or if you've changed jobs, have you had any gaps over 30 days? That is key as well. If you've taken off a couple of months, okay, so why did you take off a couple of months? And is that still okay based on the loan type, so on and so forth? Again, this is key. Different loan types require different things on that. Some loan types don't allow for like a 6 month gap history, and so that's what it's called, a 6 month gap. It's a gap. It's a gap of employment that you didn't work. Um, that matters. Um, so that's employment history. Okay, funds available. Do you have enough funds for the loan type that you qualify for? So if you're doing conventional, if you say, okay, I want to put 10% down, but I'm looking at a $300,000 house, well, that's $30,000 just there. And then you have closing costs. So do you have those funds available? Nope. Well, then we can't do 10% down. So again, this is part of being pre-approved. So you want to make sure that the funds that you have available, so whenever you are getting ready and you're doing the steps to see what you qualify for, you want to be sure to know how much funds, how much cash in the bank, not green cash underneath the mattress or in the freezer, but how much liquid cash do you have in the bank to put towards buying a home. That matters. You may say, yeah, I've got 30,000, but I only want to use 20. Well, then 20 is where, you kind of want to, okay, this is what I've got. I've got a little bit extra, but I really want to stay around 20. Then that's where, whenever, whoever you're dealing with your financing, they should be trying to fit into that 20. Okay, yeah, the 20 is going to work, but you're going to need down payment. Do you have that? Do you have a gift? Um, can you get a gift? Do we ask for seller concession? Those, all of those things, again, they matter. They're part of being pre-approved. So those are things that are looked at also in this upfront part. So the next thing is debt ratio. Debt ratio means your total debt, meaning the debt that's on your credit report, plus maybe some things that are not on your credit report. If you have a private mortgage, if you have a private loan that you're making payments on, maybe you pay child support, maybe you pay alimony. So those again are things that take into consideration. So those things are what's called debt. And then your income is your gross income, not your net, but your gross. So, whenever I talk about self employment, it's not your gross up at the top on your tax returns for self employment, it's your net. And then we add in other things, do calculations. So, on that, the verbiage is a little bit different, but it is your, as far as gross income, like if you're on Social Security, pension, what do you get before they take out insurance or taxes? If you're employed, what is your paycheck, your W-2 or your salary or your, base income before they take taxes out? So that's what we're looking at. So it is your debt versus your income. And then that's also going to tell us, okay, you cannot afford a $300,000 house. You can afford about a 225, but it's going to depend on the house with taxes, insurance, though, all those kind of things. So your monthly payment that you can afford, that you can be pre-approved for, is 1,500. And so that, again, that is key. You don't want to look at a $300,000 home if you can only afford a 225. Then we're setting you up for failure. You are getting excited over this other home that you cannot even, get approved for. Give you an example. A couple of weeks ago, we had somebody that was pre-qualified through a company, and we take care of our clients. We are here, all of the above. The real estate agent had referred them to for me to give a second opinion. We looked at it. Their pre-qualification was on 250,000. Then whenever she went back and asked for what their cost was, all that kind of stuff, so we could compare apples to apples, then they came back and said, "Oh no, you have to pay. No, we re-looked at it. You have to pay some things down." Okay, number one, blindside. Number two, we went through everything, and we could only, without paying any debt off, which again the original pre-qualification letter was 250, without paying anything off, I think it was about 160. That is $90,000 difference in a pre-approval, or in this case the pre-qualification. We could pay some stuff off if she has money and get her pre-approval higher, absolutely, because that is an option, and that's what we look at. That is what should be looked at whenever you're getting pre-approved. But again, you need to make sure that you are educated in what is being done. If they're not looking at income, if they're not looking at credit, and they're not looking at all of those things and issuing a pre-qualification letter, that's something that, in my world, in my opinion, again, my opinion, it's not worth the paper that it's written on, because it's not verifying all of those other things. So make sure, if you are buying, that you have a pre-approval letter. If you're refinancing, that you are pre-approved, that your finance person says that you are pre-approved. They've looked at everything, how much cash you want, whatever. If you are a real estate agent and you are taking and you've got a pre-approval or a pre-qualification letter, maybe go back to that lender and say, nope, we need a pre-approval letter, or have somebody else, do a second opinion. You've got to have that so that you don't put all of this money out for inspections, escrow deposit, appraisal, everything else, and fall through in the end. We have seen that. And then that's where, somebody else is trying to save the deal. So again, educate yourself. These are things that are needed for buying a house or refinancing. You really should be pre-approved. So this is a quick rundown of how a pre-approve or pre-qual versus a pre-approval differ. So a mortgage application, pre-qualification is not normally done. A pre-approval is normally done. Does the borrower pay an application fee? A pre-qualification, no. A pre-approval, yes, or maybe depends on the bank. We don't charge an application fee, but others do. So that just depends. Does the originator, like myself, I'm a mortgage brokerage because I'm a company, but I am a mortgage loan originator, which is your person that is signing the document, signing your application, that kind of stuff, that is licensed. Do they require a history check on a pre-qualification? No, but on a pre-approval, yes. Is it based on the borrower's finances? Again, what can you afford and everything else? A pre-qualification? No. A pre-approval? Yes. Um, does the do you require does it require an estimate of a down payment amount? A pre-qualification? No, you don't have an estimate of a down payment amount. The numbers aren't solid, or more solid. A pre-approval? Yes. Again, we need to know what you've got for down payment. Do you, so on either one, you normally don't have an estimate for a loan amount. A pre-approval, yes, you have, this is what you qualify for, this is what you're pre-approved for. But you don't get a quote unquote loan estimate until you have a full application, which includes a property. So that part, so you'll get normally a estimate of closing cost, or a fee worksheet, depending on who you're talking to, will give you different things. Um, does the originator specify a loan amount on the pre-qualification? No. On a pre-approval, yes, because you're pre-approved for a certain amount. Does the do I give you, do they, your finance person, whatever, provide an interest rate or interest rate information? Pre-qualification, normally no. Pre-approval, normally yes, because again, we're going one step further for pre-approving you based on the current interest rates. not just throwing a number out there and then seeing if it sticks. That's not what a pre-approval is. So I hope this helps in your search for a mortgage in order to buy or refinance a home. Again, this is information for anybody. I do these videos for information to educate you in order to be better prepared whether you're buying or refinancing a home. So if you would, if you don't mind, please like, love, share, whatever, wherever you're looking at this on your platform at. If you would, share, comment, ask whatever questions that you've got as well. Even if I'm not licensed in your state, I still welcome the questions. So, we are here to help and educate and, help you to get a better deal for yourself in what you qualify for and what you would be pre-approved for. So always love to share my knowledge and, again, give you information. So again, this is Chris with Suarez Home and Finance. I'm a mortgage brokerage, but I'm a mortgage loan originator as far as a person. So whoever you're dealing with, make sure that, you know who they are and are they licensed? Do they know, are they getting the correct information? So hope you have an awesome day and make sure you help someone else smile today. So talk to you later. Bye.